Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Constellation Energy Corporation, a leading provider of clean energy and power generation services in the United States. Constellation operates one of the largest fleets of nuclear, solar, wind, and natural gas facilities, providing energy solutions to millions of homes and businesses. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Constellation Energy has been a significant player in the energy industry, particularly in the clean energy sector. From a behavioral finance perspective, how do biases like the status quo bias and loss aversion influence their decision-making, especially in areas like energy production and market expansion?
The status quo bias is particularly relevant to Constellation's approach, especially in how they manage their energy production and portfolio diversification. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. Constellation leverages this bias by focusing on maintaining a balanced mix of energy sources, including nuclear, solar, wind, and natural gas, ensuring a stable and reliable supply of clean energy. This approach allows Constellation to build and maintain trust among its customers and regulators, particularly in an industry where reliability and environmental responsibility are crucial. Loss aversion also plays a significant role, particularly in how Constellation approaches risk management and capital investment. Loss aversion refers to the tendency for people to prefer avoiding losses rather than acquiring equivalent gains. In the context of Constellation, this bias can drive the company to adopt conservative strategies in expanding their energy portfolio and invest in new technologies, focusing on minimizing risks associated with regulatory changes, market volatility, and environmental concerns. While this approach helps protect their market position and minimizes risks, it may also limit the company's ability to pursue more aggressive growth strategies or invest in innovative energy solutions that could drive long-term gains.
And this focus on leveraging the status quo bias and loss aversion has helped Constellation maintain its leadership position in the clean energy sector, appealing to both customers and investors who value sustainability and reliability.
Exactly. Constellation's strategic use of the status quo bias in maintaining a balanced energy portfolio and loss aversion in risk management appeals to investors looking for a company that balances operational excellence with cautious growth strategies. However, this approach also means that Constellation must carefully manage the risks associated with market shifts, regulatory changes, and technological advancements, particularly as the energy landscape continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Constellation Energy. As a major player in the energy industry, DEI is particularly important for Constellation. How does this intersect with behavioral finance?
Constellation's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, innovation, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Constellation's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Constellation to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the clean energy industry. For investors, Constellation's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Constellation build stronger relationships with employees, customers, and regulators, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like energy, where the ability to foster inclusivity and environmental responsibility is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Constellation not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Constellation operates in a highly competitive and rapidly evolving industry. How does the company adapt to changing energy markets and technological advancements, and what role does behavioral finance play in this?
Constellation's strategy involves continuously adapting its energy portfolio, technology platforms, and customer engagement practices to meet the evolving needs of the energy market while maintaining its focus on sustainability and reliability. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, technological advancements, and shifting customer demands. Constellation's ability to understand and respond to new market trends such as the increasing demand for renewable energy, the integration of smart grid technologies, and the shift towards decarbonization allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, Constellation can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the clean energy market.
And this adaptability is essential for Constellation, especially as they face competition from other energy companies and the growing demand for more sustainable and innovative energy solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Constellation's focus on understanding energy market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the clean energy sector while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in regulatory landscapes, technological advancements, and competitive pressures.
Now, let's compare Constellation to other companies in the energy sector like NextEra Energy, Duke Energy, and Exelon. How do the behavioral finance dynamics differ?
Constellation's dynamics are often compared to other energy giants like NextEra Energy, Duke Energy, and Exelon, particularly in their approach to sustainability, market expansion, and competition. Constellation's strength lies in its focus on clean energy and balanced portfolio management, appealing to investors looking for a company that balances sustainability with operational excellence. NextEra Energy, with its emphasis on renewable energy and technological innovation, appeals to investors interested in a company that prioritizes market leadership in green energy. Duke Energy, known for its leadership in utility services and grid modernization, attracts those looking for a company that is driving advancements in infrastructure and energy efficiency. Exelon, with its focus on nuclear energy and low-carbon solutions, appeals to investors interested in companies that integrate environmental sustainability with reliable energy production. Constellation's behavioral finance dynamics are shaped by its reputation for sustainability, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the clean energy industry.
And unlike NextEra Energy, which focuses heavily on renewable energy and technological innovation, Constellation's strength lies in its specialization in clean energy and balanced portfolio management, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Constellation, the focus on clean energy, sustainability, and market adaptability provides a unique value proposition in the energy sector.
To sum up, Constellation Energy Corporation's approach to business is deeply influenced by behavioral finance principles, whether it's through their energy production strategies, adaptation to changing market conditions, or their approach to DDI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Constellation's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.